Good evening, friends. This side Rahul Magan here. Today we are going to speaking about two important things. Number one is the Jeffries, who is a research firm. Number two is PayTM. But before I speak or cover these topics in detail, this side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting. We hold our own private equity firm, and unlike PayTM, Ola, Uber, Swiggy, Zomato, Lenskart, Delivery, and many, we are profitable. Not a single dollar is being invested by any venture capitalist firm in our company. Neither we want it. Of course, this makes a lot of people frustrated that how come without any investment from any private equity firm somebody able to reach to this destination. In fact, many regulators are also having eyebrows that this person not raised a single rupee but still at this level. Anyways, as an organization we hold our hedge fund, which is proprietary in nature. By proprietary, it means that we do not take third party capital. So whatever positions which we are covering, these positions are well capitalized by our own capital, no third party capital. That is very important thing. Functionally speaking, our hedge fund cover FICC, fixed income, currencies and commodities. Apart from that, we do cover crypto. We have COMEX platforms, but like I said, third party capital is not invited anytime. Not today, probably not tomorrow also. One of the basic pillars of any capital market is brokerage firms. We can call this as brokerage houses also. They play a very important role. Now, who are they? They are those people who ideally, I'm using word ideally, supposed to be independent, supposed to give the realistic view on any stock. So let me give you a simplistic example in terms of audit. Every company of the globe, you name any, doesn't make any difference. They have one internal audit department. Now, how efficient the internal audit department, we all knew. Diwan Housing was also having internal audit department. Infrastructure leasing and financial services was also having an internal audit department. Yes Bank was also having internal audit department. PMC Bank, and there are hell lot of examples which I can give. And don't think that this only relevant for India. Outside India also, so many failures. So how capable is the internal audit department? We all understand very well. But having said that, one important thing which we need to learn is that the system made one more check, which is called statutory audit. Unfortunately, the big fours like KPMG, Deloitte, PwC, they all do the statutory audit, and what is the end result? We all aware about that. Not a single day passed when these big fours are not ending into any form of scandal or any fines are being imposed on them across the globe. So this is the system. Similarly, when it comes to stock market, especially talking capital markets, which includes equities plus bonds plus mutual funds and other asset classes, there are rating agencies of that independent country. But there are rating agencies that are not pertaining to that country, rather they are global. So example, every country of the globe is having one medical institution who won this country. But what about WHO, World Health Organization? They cover the whole globe. Similarly, in India, we are having many domestic research firms like Motilal Oswal, Kotak Mahindra, Rally Gear, many. How efficient are they? You know very well. No words on them. Similarly, we have global research firms. Morgan Stanley, Goldman Sachs, JP Morgan Chase, Citi, Standard Chartered, UBS, Barclays, BNP Paribas, ANZ, Jeffries, Nomura, many. Some of them have their independent business models like bank, Goldman Sachs, but their research is independent, at least on paper. We can say at least on paper. Now what happens is these research firms gives their advices or their recommendations or give their research to the public. Now some of this research is public and some of them is paid. So example, I'm not naming any research firm specifically. We do have many research firms whereby lot of research reports are paid. You go to their website and pay and get, while few are in public. One of these research firms is called Jeffries. But before I come to Bharti Airtel, let me give you one simplistic thing about Bharti Airtel. Bharti Airtel is losing momentum at a much faster pace. Example, their debt is now 1,80,000 crores. You heard me right. 1,80,000 crores is the debt of Bharti Airtel as we speak. And it is growing. It was 1,62,000 crores, now 1,80,000 crores, and 5G is also coming, and so on and so forth. So let me first give you a statement which is being given by, the Jeffries on Bharti Airtel. Let me give you that statement. Despite our projection of $11 billion capex, including $2 billion on 5G spectrum, we expect Bharti to deliver $5.3 billion of cumulative free cash flow over financial year 23 and 24. Okay, so Jeffries himself is acknowledging the fact that they are projecting around 11 billion capex. Now 11 billion in dollar terms, not INR. Now 1 billion is near about 7,400 crores, which means around 80,000 crores worth of capex they are expecting. A company who is already in a debt of near about 1,80,000 crores, how would they get 11 billion capex? Steve Jobs will also fail to explain this, so don't look at me. But Jeffries feel that Bharti Airtel would be able to meet 11 billion of capex. So you are already sitting at around 1,80,000 crores of debt, and still you feel that this company can generate cumulative cash flow, free cash flow, FCF, to the tune of $5.3 billion. Now, which means near about 40,000 crores. 40,000 crores worth of free cash flow can be delivered by Bharti Airtel. This is really a very interesting thing to learn. So what I did some research and I'm going to be showing you. Just give me 1 minute, guys. So I go there and I just type Bharti Airtel and in Bharti Airtel I look at the P&L and this is the yearly P&L. Now look, yes, financial year 2017, 3,800 crores of profit. Financial year 2018, 1000, roughly 1100 crores of profit. Financial year 2019, 410 crores of loss. Financial year 2020, minus 32,000 crores of loss. Financial year 21, minus 15,000 crores of loss. Now, which effectively mean that even if I add financial year 10 till financial year 21, Bharti Airtel cumulatively is in loss. So how come Bharti Airtel would be able to generate free cash flow of 5.3 billion? Steve Jobs will not be able to answer. Now I go to cash flow situation to make things more beautiful and interesting. If you look at the cash of Bharti Airtel, basically the investments, it is near about 27,000 crores of investments, while the debt is around 1,80,000 crores. Do you know, in 2010, Bharti Airtel was having 10,000 crores of debt, 10,000 crores. And now it is 1,80,000 crores, which means in the last 11 years, the debt of Bharti Airtel grew by more than 18 times. More than 18 times. The harsh reality is, if you look at the P&L of Bharti Airtel, 15,000 crores in financial year 21. 15,000 crores is paid as an interest. 15,000 crores is paid as an interest. If I add financial year 20, 14,000 crores, which means financial year 20 plus financial year 21, around 29,000 crores is paid as an interest. 29,000 crores only as an interest. Did any paid media of India have guts to cover this? I doubt, giving you in writing. So now read the statement of so-called Jeffries again. Despite our projection of 11 billion capex, including 2 billion for 5G spectrum, we expect Bharti to deliver 5.3 billion of cumulative cash flow. We raised the target to 925. As we speak, Bharti Airtel is around 730 something, and now they are raising the target to 925. This suggests where exactly Indian capital market stands and how diluted and polluted is the research firms. In this whole article which is being given, not a single place they mentioned about the debt, not a single place they mentioned about the interest cost, not a single place they mentioned about the negative bottom line. But they are giving a target of 925. Now what is going to get happen? A retail investor who hardly owns any knowledge, he would be see that, oh my God, Hindi media, I have a screenshot which I am going to be uploaded on my Twitter handle. There is a screenshot whereby CNBC TV is attached. And this screenshot is saying that Jeffries is giving the target of 925 to Bharti Airtel. And this screenshot completely missing the debt piece. And this is how the retail investors are fooled in India. Because these brokerage firms are aware that these retail investors hold no knowledge. This is part one of the story, which is Bharti Airtel. But before I conclude, I already tweeted that one more tweet is pending. Probably tomorrow I would be tweeting. I am giving open challenge to Jeffries. If you really think you are not a paid institution, I repeat, you are not a paid institution, I challenge you that how Bharti is 925 paid institution if you take the challenge. Now, second is my favorite company in the whole universe. No, multiverse. It is said that Brahmaji made 64 universe. 64. So Earth is this in this 64 universe. This is Earth. As we speak, we knowing even a fraction of our space. And Brahmaji made 64 universe. So in this all 64 universe, my favorite company is PayTM. Because in whatever business they entered, they are in loss. Whatever business they enter. Now they have declared the September result, and you would be surprised to know in September result, which means the September quarter, they reported a loss of 474 crores. After listing, Zomato also reported cumulatively June quarter plus September quarter a loss to the tune of around 756 crores. And Bharti Airtel reported PayTM reported 474 crores. Many Einstein, Edisons, Newtons, Galileo and all who used to say PayTM would be listed and then they would become profitable, this is the reply to them. But what is the biggest problem? The biggest problem is Indian investor is completely unconcerned about that because he's not aware about that. I'm sure that 99% of the retail investors till now even not aware that PayTM quarter 2 results are in public and it is in loss. As we speak, the world is facing another variant of coronavirus, which is originated in South Africa as far as the public figures are concerned. Globally, the travel is on. International travel is on. I don't know, but there are many articles in the public domain which suggest that this variant is more deadlier than Delta. As the time progresses, we have better information. But having said that, one important thing which we need to learn that markets will collapse. Now, when markets will collapse, these loss-making companies, Ola, Uber, Swiggy, Zomato, PayTM, Delivery, Oyo, Pharmacy, and many such companies, they would be in big trouble. Eventually, they all will get listed. That is also a fact because they know how to fool the retail investor. They know how to get the approval. We need to learn that even after listing, Zomato not become profitable. And this time, PayTM reported losses. So congratulations to Vijay Shekhar Sharma. Now do the mathematics. Vijay Shekhar Sharma raised 18,000 crores in this IPO, which is near about $2.5 billion, you can say. In this 18,000 crores, 10,000 crores was OFS. OFS means offer for sale, which means existing investors are offloading while new investors are pumping their money. Now, majority of the new investors are retail investors. Now, existing investors already quitted 10,000 crores. They hardly bother about the loss. Now, this person raised near about 18,000 crores, which means if in a one quarter he lose 500 crores, it means in 1 year he would be losing 2,000 crores. It means he holds 9 years to burn the money. He need 9 years to burn the money. So PayTM is safe and secure in the next 9 years. And God knows, tomorrow they might be raising some debt also. They might be coming up with FPO also, which is follow on public offer. You know how to get the approval in India. No regulator in India having guts to speak against these loss-making companies. Now look at that. Out of 18,000 crores, near about 500 crores is already burned. More is on the way. Please do note that. Please do note that these loss-making companies will spoil the whole equation of the globe. This is Rahul Magan from Treasury Consulting Group. You know my personal number +91 9899 242 978. Thank you.